All right. What's up, traders? What's up, tycoons? Super excited for today's video. Is TLT the right thing to be trading right now, or possibly should you be looking at TBT? This is the ultra short 20-year Treasury index. And as you can see, this has been on a pretty nice rally here recently as Treasury yields are starting to rise and also TLT is starting to drop. So, of course, this video isn't financial advice. I'm not telling you guys to buy this, but I did have a nice comment in the comment section saying to cover TBT. And so I do viewer requests every week. So I just wanted to do a quick update on TLT after we had the Fed minutes and also bring some exposure to TBT, the short version of the 20-year Treasury. All right. So as this goes up, essentially, you're going to be seeing things like TLT go down. So if we take a look, we just had a breakout, okay? So we broke out past this trend line here that we tested a few times, right? We got a very clean breakout, slight pullback, and we're continuing to push up higher. So with that being said, we do have the possibility of increasing more in this index, all right, and potentially coming back up to 3269 to retest some of our previous highs that we had over here. Now, a big factor in this is going to be treasury yields, okay? If you're starting to see those continue to rise and we have PCE coming in Friday, let's say that that comes in hot, this is going to cause the TBT index most likely to go up, right? Now, if PCE comes in, kind of weak, all right, and it doesn't really come in very hot, and maybe it's even below expectations, okay, then something like this would drop and you would see something like TLT go up. So definitely keep that in mind whenever you're trading, of how the news is going to affect these, how the treasury yields are going to affect these. The bond market is much more massive than the stock market and is really a much better has a much better understanding of the economy versus the stock market is a lot more speculation. People trading bonds, okay, is generally people with large amounts of wealth, large wealth managers, and they're a lot more predictive of the markets, and the bond market is a little bit clearer on what's really going on in the economy and with the news. So with that being said, remember 3269 is a level that we could come up here and potentially retest. Now if we continue to pull back, all right, our current major Fibonacci retracement levels are going to be right at 30, 29, 38, and 28.77. And the reason we use these is because nothing moves in a straight line up or in a straight line down. Rather, you get a move up, retracement, and then a continuation of the trend. Now, this is based off our most recent swing low to our most recent swing high. So if we put in a new swing high, we'll have to adjust these Fibonacci retracement levels. But as TBT pulled back today, we could still pull back to these levels and be in a healthy, pullback range to ultimately continue going higher. Now, if we come up to that 3269, you want to be cautious of a double top. Okay, so that's why I have this as blue right here. This essentially is going to be your blue breakout level. All right, so if that happens, we could end up putting in an M pattern here, and we could see, a double top turn into an M. All right, but if we are able to break out past 3269, the bullish price targets above that I'm looking at are going to be 34.29, 35.12, and 36.32. Now, there is also a gap up here that I didn't draw, but I'll go ahead and highlight it. We're not really there yet, so I don't have it highlighted. But notice how there's a gap in between these two candles, all right? These gaps, they fill about 90% of the time historically. The big question is when do they fill rather than if they're going to fill, okay? Now you can see there's multiple gaps, all over the chart. This gap ended up filling, right? This gap right here ended up filling. This gap right here ended up filling. So, eventually these gaps fill. It's just a matter of time. And so it's pretty important, in my opinion, to chart these up so that way you can kind of tell where price action is being gravitated and drawn towards and whether or not it's going to fill some of these potential gaps. So we do have the gap up, but pay close attention how there's a gap down right here, right about the 2750 range. So if we end up breaking those major retracement levels, there's a high likelihood that we're going to come down and fill that gap and potentially get that M pattern to play out. Now, remember what I said about how it affects TLT. So if we actually slap TLT on here, okay, and just do like a little comparison chart, and I'll make this white real quick just so it's a little bit clearer for you guys. You can see, all right, just so you truly can visualize the understanding, when this is going down, right, you're seeing TLT go up, right? TLT is our white line. As this is trending down, TLT is trending up. So I just wanted to give some possibilities out there. I know a lot of people necessarily don't trade options, and aren't too comfortable necessarily shorting things, and rather only looking to purchase things. So maybe if you're a little bit bearish on TLT at some times, you could try to take a position on TBT, as they have typically an inverse relationship, and this is going to be the short 20-year treasury. All right, now remember, not financial advice, just going over some data, presenting some data to you guys. Now let's take a look here at TNX. Remember, I said you want to pay attention to the treasury yields. Okay, so TNX and TLT are going to have a very similar effect. All right, or rather TNX and TBT when it comes to the inverse relationship to TLT. You can see as this is going down, as the treasury yields are dropping, okay, you can see that the price of TLT is actually going up. That's the way that bonds work. Now, there's been 3 levels that I've really been paying attention to here on TNX. And we actually really just broke out. But basically, I was saying that, rates could still go higher, when it comes to the treasury yields above these 3 levels, right? And notice how, again, these are the major Fibonacci retracement levels, the 38.2, the 50%, and the 61.8%. So you can see, as the treasury yield has started rising and we got a very strong breakout, that coincided with the breakdown in TLT. So if you're going to be trying to trade bonds, you definitely need to be paying attention to some of the treasury yields. I like to look at TNX. Some people want to look at, maybe they don't like looking at the 10-year yield. Maybe they want to look at the 2-year. There's lots of different things you can look at and analyze for yourself. But we saw a strong breakout on the treasury yields, pretty much flat today after the Fed minutes. Not really too much of a change, down 0.81%. So, it is down a little bit, but it's really holding up, I believe, right around 4%, just under 4%. Yeah, 3.924. So, as if this thing gets above 4%, then, that could be more pain in something like TLT. All right. So just keep that in mind. We did, get a very strong breakout. We've continued that breakout. TLT actually filled the gap that I mentioned in a couple videos ago. And I believe in my most recent TLT video, honestly, I was kind of expecting a bounce in the market. I actually did play a couple bullish plays in the Discord. And then, the Fed minutes came out and we did end up seeing a slight pullback, but NVIDIA after hours has actually beat earnings. And I think that there's a chance that we could see the stock market, things like SPY or maybe the QQQ, have a little bit of maybe a bullish open, if not a little bit of a bullish day. It really just depends. Not too positive for sure. I don't really have any trades based off of that, or I'm pretty much closed my positions today. Took some small profits before the meeting came out, and then just let the meeting do what it does, right? And it causes crazy volatility. Now, when it comes to TLT, all right, we've basically been tracking the same thing since I've started making my TLT videos for you guys on YouTube, and things are still falling pretty well according to plan. So initially, we're looking for a larger 5-wave move down. All right. Now, I'm not going to zoom out all the way and show you guys, but essentially your wave C, which is our wave 3 of the larger move, and then your wave E, these are going to be 5-wave moves. So, initially we got that 1, 2, 3, 4, 5, and your wave 4, right? Your wave 2 and your wave 4, those are going to be corrective waves, right? And the way that you can tell that they're corrective waves and you're following the structure is if it's an ABC move, right? A 3-wave ABC is a nice correction wave. And you can see we got the 1, 2, 3, 4, 5. We got a nice ABC. And really things have been throwing us in for a loop here, okay? We broke our structure a little bit. Instead of getting a clean 1, 2, 3, 4, 5 down, all right, what we ended up doing was we put in some bull flag consolidation here, and it was really throwing a lot of people off. We consolidated here for a very long time. and it was really confusing. And I was trying to tell people just to be patient. Okay. You don't have to force trades every single day. And, there's not always going to be an opportunity present, especially if you're only focusing on one ticker, right? There's always going to be an opportunity somewhere in the market. And if you're too busy focused on one thing, you could end up missing other opportunities and forcing trades that aren't really there. So, eventually we did get the signals that we were looking for, right? And those being the MACD sell signal, which is why we had some question marks, and I've still left that up there just to really highlight, like we were showing all the times that we got crossovers, all right? And each time those have been some nice signals for some entries or some exits. We did start following the structure. And then, as I mentioned, we had that bull flag. So threw a lot of people off. We've broken our major support level of 102.88. So if, TLT continues to rally here in the short term, that's going to be a major resistance level, okay? If we come down, break, retest, that's going to be a very, very clean bearish structure, right? And so if we come down, retest that 102.88 or near that level, and then, hold that as resistance, most likely we're going to come back down and fill this daily gap down below that we have to fill. Now, this daily gap is going to bottom out right around 95.15. So let's just call it 95 for round number sake. And ultimately, that would give us an M pattern, right? So I mentioned an M pattern on TBT that could possibly form. But if you look here, we've gotten a pretty good, so far play out of the M pattern, right? We had the top here, we had the double top here, okay? And so here's the beginning of our M. We come down, we bounced off of this trend line here, and we were expecting that to end our wave one, okay? And we were looking for some type of a bounce up here. And a lot of people didn't think that TLT would bounce this much, but we were able to capture that move and, really trade that nicely. All right. And again, ultimately just kind of setting up for a potential M pattern. Now, it doesn't mean that we have to drop straight down. We could come up and retest that 102.88. But, if we end up flipping that to support from resistance and we break through there, the next major levels up above is going to be 106.29. That's going to be a really big resistance level. We do have a small gap up to fill as well. So, I like to, keep all the scenarios open. All right, we do have a gap up to fill up to 108, and then we have another gap up here to fill around 111. Now, if, inflation keeps running in hot and treasury yields, continue to rise, most likely those gaps aren't going to fill yet, right? It's going to fill sometime later in the future. But if treasury yields start to fall and you see things like TNX falling, and you see, inflation coming in, not as high or maybe even below expectations, then that's when you could see the bond market in TLT start to rally. There's no really big divergences on the relative strength index right now that I'm paying attention to. We did have some divergences previously, but those divergences were bearish and they ended up playing out. So we had the bearish divergence along with the MACD sell signal, and it gave a nice clean move. And we're going to see if, we can hit our wave 3 target right around the 95 to 97 range on TLT. That's where I'm going to be looking at for, expecting some type of a wave 3 bounce. Now, remember, these drawings, they're here before we actually come to these structures. Okay, so, it's not going to come perfectly down to the levels, and it's not going to, it's not going to be an exact mirror of this, but this is just an overall structure that we're looking to see. This is what I'm tracking. And typically what you're going to do is you're going to come down here and hit right around your extensions of, your C and D wave. All right. Like your C wave is going to be the extension of your A to B, right? And your E wave is going to be the extension of C to D. Those targets are going to be 80.93 all the way up to 87.09. Now, a lot of people don't think TLT can drop this low, and, they're justified, right? The reason being, if we take a look, we're going to zoom out real quick. All right, so we've zoomed out a little bit, and what we've done is we've actually gone back into the past. So look, this is 2003 right here, and then this is the beginning of 2004 right here. Now, what's pretty important about this is that these are essentially the all-time lows on TLT, okay? And it's above 80. So I can see why a lot of people think that maybe TLT wouldn't go that low. And I'm not saying it even has to go all the way down to 80. It could go below 80 for all we know, but, it may stop up there around, that 80 to 90 region is really where I'm targeting for the end of my 5-wave structure. So we're just going to see how things play out. things could completely reverse, yields could start plummeting, and then, TLT could skyrocket. So I'm definitely open to all possibilities. But if you take a look, we essentially have this little demand zone right here from the past, right? And so, we bounced multiple times in here in the past. And so once we come down towards closer to 80, there's going to be a lot of prior support, a lot of prior demand that hasn't really been tested. But what's really interesting is a lot of people are comparing the current market setup to the dot-com bubble in 2000. So, these are the years after 2000, right? These are the following preceding years. We've got '03, so this is like in '02 right here. This is summer of 2002. This is summer of 2003, and then this is summer of 2004. And a lot of people are saying that the current market environment is very similar to the dot-com bubble. And if that's the case, then there could be potentially more pain in the future for the markets that a lot of people really aren't pricing in, and we could come down to some of these previous levels that we tested around that dot-com bubble. So that's pretty much where I'm going to end the video. Just wanted to, go over TBT, show you guys TBT, and also just give you a quick update on TLT, TNX, and, some of the movements and the structures that we're seeing in the market. And hopefully you enjoyed the video. If you did, smash the like button, subscribe to the channel.